Welcome to this webinar on profitable pricing. I'm your host Malcolm Gallagher, presenting this for you on behalf of Destination Staffordshire and Winning Moves as part of the ERDF funded programme for tourism and hospitality businesses in Staffordshire. As usual, there's a little time at the end of the webinar for questions and answers. You can ask these as we go along via the chat part of the system, but I'll save answering them to the end. You may like to take a note of my Winning Moves email address, malcolmg@winningmoves.com, if you want to ask something specific or to request any of the tools that are in this webinar. Please note, this webinar is being recorded and will be available online in the future in the new Destination Staffordshire Tourism Academy. Okay, that said, let's get on with profitable pricing in tourism and hospitality. There are three parts to this webinar: know, plan and manage. First, we'll know all about profit and pricing. Then we'll plan to have successful and profitable pricing. And finally, we'll manage the results. So, the first part of the webinar, know. The profit concept is the first thing we need to think about. It's making a profit from the added value, and remember that phrase, added value, as it'll rear its head many times during the webinar, the added value given to products and services. So just think about added value. There's a piece of steak. There's me as a chef, and then there's a proper chef. So I'll make you a steak, and that means I've turned the steak into a meal. So I've added value to it. But then the professional chef takes hold of that piece of steak, and suddenly the added value is immense compared to my culinary efforts there. So you need to think very carefully about how you take the raw thing of, should we say, a room or a table or a piece of food, whatever it may be, and add the value. Where is your added value? Because that's what's going to give you the profitability. So what is profit? Well, there are three main ingredients. The cost, that's the cost of you buying your raw ingredients in or building the accommodation, the cost. The selling price, and of course, the third and important thing, how many of them you sell, the sales volume. But there are other considerations that need to play into profitable pricing, and I've got a few of those on the screen. First of all, the cost of providing your offer to the customers. Now, when I'm going through various parts here on these 6 points, often they are things that are ignored by many of the businesses that I meet on the Winning Moves Destination Staffordshire programme. The cost of providing your offer to the customers. Often people don't think carefully about the cost of product and services. Then there's the cost of the quality against the lowest possible price. And often people will get that balance and that mix completely wrong. The minimum price that you need to charge to keep the business afloat. And you'd be surprised how many people do not know their break-even. And by the way, if you would like a little break-even tool, then please just request it on my email, malcolmg@winningmoves.com. The money that you need to make from the business to have what's called what I call living earnings. That's to have, for you and your family, to have a comfortable living. Then we've got another factor in tourism and hospitality that's in the bottom quadrant there, bottom box there. The different seasons we need to cope with. Now, all too often people have the same pricing across the season. You need to think very carefully about how you're going to tackle the different types of seasons and how you're going to bring people in across the different types of seasons. And then finally, and this is an area that really I do spend quite a lot of time in when I'm doing coaching, is which parts of the business contribute or not to the overall profit. Thinking about how much profit you should expect to make is a sensible approach. Now, we've got so many different types of businesses that we deal with at Winning Moves, such as hotels, restaurants, B&Bs, visitor attractions, and so on. I've just focused upon one in this particular slide here, and that's a well-run restaurant or cafe, which makes between 5 and 8% profit. That's the fairly norm in the UK, 5 and 8% profit. Now, whilst every restaurant is different, I've given you a breakdown to look at the various types of costs there. Food, 30%, and labour, 25%. That's a whacking 55% of the costs going into just two items there. Rent and rates, insurance, legal, marketing, maintenance, utilities. Utilities is fast-growing cost there at 3%. Watch out, because many people, I'm finding, that's gone way, way ahead. So having a look carefully at those different cost breakdowns and making sure that you manage them will help you have profitability, but also help you determine the pricing that you need to have just to cover those costs. But not everybody's the same, and the more that you know your customers, the more you have detail of those customers, then the more profitable then you can make them. So I'm asking you to take a little exercise, and you can see it's a very simple little spreadsheet or table there. On the left-hand side, the left-hand column, write down the type of customer group, so types of customers you've got. Now, they could be what we call the WOOFs, for example, WOOFS, well-off older folk, who generally don't have many financial problems these days because they may have paid for the house and have a good pension. Then you have the young families who may be struggling a little bit. Then you have the young couples, or you have other couples that you might identify, such as the ones that are cash rich but time poor. In other words, they've got a busy job that's paying them a lot of money, and when they do get that chance to have some time off together, they don't care what they're spending because they're cash rich. They just want to maximize their enjoyment of that time together. So identifying the different types of customer groups, or the ones that you would like to attract as well, becomes quite an important exercise, because if we do that exercise, then we can start to look at how we can make them profitable. And that's in the far column there. But understanding your customers and knowing their behaviours and motivations really does help you on your pricing. The goal in marketing is always to sell to one or market to one person, but on pricing we also need to be thinking about the customer quite closely. So I've given you 3 prompts on the screen there. Who are they? And I've just been talking to you about the different type of customer groups or customer types there. And what are those people thinking and feeling? Why are they coming to stay with you? Why are they coming to visit you? What are they thinking and feeling? And what do they want to be doing? What is it that where their enjoyment, their experience will be enhanced? And importantly, how can you help that and feel that you're part of that total experience? I've got a pricing checklist which I'm delighted to send to you. Again, if you email me, malcolmg@winningmoves.com, and as part of the pack that I can send you, this will be this spreadsheet. Now, I've divided this particular checklist over 2 slides. Here, the first slide and the second will have a few more items. Not all of the items in the checklist may be relevant to you, but the idea is to prompt you, to get you thinking, and to get away from that typical price reaction that people do with saying, right, I'll price the same as somebody else, or they'll pick a price out of the sky. So get them to think about it. Our room rates vary in line with how busy we are or think we'll be, based upon season and trends from the previous year. You've got to answer yes and no, and then take some action there. If you pick up a holiday or a travel brochure, you will see different prices across different times of the year. These are called barrier periods, and it's sensible to have a range of barrier periods so that you can maximize your occupancy and maximize your profit in the high season. But too often I just see people ducking out of that and having one price across the season, or maybe two prices. No, the opportunity of leveraging a little bit more at peak season is sensible. In the middle there, we monitor what tariff comparable businesses charge. Now, what you should really be doing is having what we call a comp set, C-O-M-P, comp or competitor set of, say, 5, just a handful. 5 are your main competitors. Get their pricing, watch their pricing, do that via the website, dip into what people are saying about them on TripAdvisor, know as much as you can about them so that you know what their charging is, what their charging strategy is, and how you can actually beat them. Number 4 on that price list there, keeping a full record of all the costs that incur. Many of us are working with different businesses across Staffordshire on the benchmark index program of winning moves, and we go into a business and using the online system help them analyze where they stand. And you'll be surprised how many businesses are coming back to us not having the right records on costs. And of course, when they do delve in, suddenly finding that they should really have been keeping a good control over those costs, because those costs eventually determine what price you need to charge and whether you will make any profit or not. Have you worked through, on the final cell there, have you worked through a break-even analysis? If you haven't done such an exercise, then again, request my little break-even tool from my email address, malcolmg@winningmoves.com, and all you have to do on this little spreadsheet tool is put a few figures in and then press the column and it will work out the break-even analysis for you. Okay, into the second slide of the checklist, and you can see we've got a few more to consider here, and just being aware of the different costs incurred by the different parts of your operation, kitchen, bar rooms and so on, is very, very sensible. All too often people just bundle them all into one. No, let's separate them out so we know that what is being profitable and what isn't. Knowing that how much profit you need to earn in order to have a proper living, again, is sensible. Now, I understand that so many businesses that we deal with in tourism and hospitality are what's called lifestyle. In other words, it really doesn't matter whether you make a profit or not. It would be nice to make some profit, but it's the cash, some extra cash that you're wanting to come in. But then on the other side, and that's what this particular program is support program is about. We're about growing your business, helping the visitor economy across the county. So we really need to be very professional and managing our costs and knowing what they're based on. Now, the third part of the checklist there, our pricing is based on our costs, not on what we feel we should charge because everyone else does. Now, too many people focus upon what everybody else charges. I was in working for Revenue and Customs, presenting some hospitality events in Torquay not long ago, and I stayed in this most fantastic boutique B&B. The couple of guys running it had done a superb job for it, and I came to pay my bill, and they were charging me £27 a night for a room, including English breakfast. And I'm saying to them, why are you so cheap, for such a superb product? And the retort was, well, it's what everybody else charges around here. And I says, yes, but have you seen what the other places look like? There were some places that were abysmal. You just wouldn't go past them, a dirty net curtain at the front window and so on. And they were comparing themselves to those businesses. Don't do that. Don't charge what everybody else is doing. Charge what you are offering on the experience. Now, the fourth cell there, the results of our customer questionnaires indicate that we offer value for money. That's the feedback surveys that you should be doing with your customers. But another good way of checking on this is to get into TripAdvisor and read between the lines, because your customers will be telling you quite straightforward what they think. And in many cases, by the way, you'll find that you perhaps could be charging a little bit better because you're giving perhaps too good value for money. Understanding what additional services your customers want is a sensible way of looking at how opportunity of increasing profitability and increasing pricing. And the bottom two cells there are areas that I feel that all too often businesses just forget about. Watching the costs of your of the products or services you're getting from suppliers and negotiating them down. I was with one rather nice gastropub just recently, and we were going through the various costs on the benchmark and everything, and suddenly finding that her local butcher's bill was way over £20,000, and all she'd been doing is just paying for the prices the butcher had given to her rather than negotiating. So she went back and managed to get a 20% reduction. Now 20% on 20,000 is a nice amount of money to come into your profitability there. And of course it means that you can be a little bit more sharp on pricing if you need to be. So that's the checklist, and as I say, I will send you that by email if you request it from me. Moving on to the third part of our webinar, and that's planning for profitable pricing. And my straightforward comment here is the right price that you'll charge is the price that the customer is willing to pay for the experience. Now, you don't sell beds, you don't sell rooms, you don't sell visitor rides or whatever it may be. You sell experiences, and the customer judges what they're going to pay for you or the value of it based upon that experience. So that's why you really do need to know your added value. This is where you do really need to know what the experience is that you're offering. This is where you do really need to monitor carefully customer feedback and read between the lines relevant to what the experience they're offering and what they feel about that experience. Knowing your pricing strategy and where you are aiming for is a sensible early approach. So on this Battenberg, we call it, looking like the cake, isn't it? This Battenberg view, on the top we have price with a high price and a low price, and on this left-hand column we have quality, high and low. So if you have a high price and a high quality, that's a premium strategy that you are working on. That's your premium pricing strategy. If you go to the right side of that, with the low price and the high quality, it's a good value strategy that you're offering. Now you have to be careful here, because you may just be underpricing yourself, thinking that you want to offer exceptionally good value and giving them too much away. In the bottom quadrant there, you'll see that we've got high price and a low quality, and that's called an overcharging strategy. Now what often happens is that that's used by many people for a particular event or a one-off, and that won't be happening again. Just be careful in that one, because obviously you can cause yourself a bad reputation. And in the bottom right hand quadrant, we've got low price and low quality, which is called an economy strategy. And don't get me wrong, there are people that actually need such a strategy, and it satisfies a particular market. Just actually have a look at those markets now. And again, sticking with this quadrant approach there, on the top now we've got quality, low and high, and on the side there we've got price, low and high. So if we had low quality and low price, then we'd be talking about perhaps a budget airline. And again, don't get me wrong, you fly Ryanair, you're flying brand new aircraft, very new aircraft and everything, and they get you from A to B. Some of the aspects of the customer service may not be to the highest of standards or whatever it may be, but it's acceptable. If you're then looking at, shall we say, high quality and low price, this is a penetration policy. And you have to be careful, because you'll be thinking, well, how can people be charging so low? Well, their goal is probably to get high penetration, to get big market share. I was involved with that when I was at Thompson Holidays. We wanted to be number one, so therefore we had a very predatory pricing policy to get the volume up. And you find that a lot with these today with budget hotels, that they want high penetration, so they have a very low price. In the bottom left quadrant, you have a low quality and a high price. This is called often called skimming. In other words, a new movie comes out and you say, what, it's £15 for that DVD. You wait a few months and it'll drop dramatically. But of course, what they're working on the fact is that you want to be in there quickly, and you're going to pay that price. I saw that the other day with the Qantas got the first ever continuous flight, one no-stop flight between Perth and London, and it came on stream. It's a 17-hour flight, no stops, completely through, came on stream at £1,300, and on the day that it was due to be flying, it was down to £700, and obviously they were taking the higher price from those people that wanted to be in first on that particular first ever non-stop flight. And then the other strategy is the high quality and the high price, and that's a premium pricing, and that's obviously in things like first class travel, where people are prepared to pay for that exceptional experience. And it may be that they've got a celebration, anniversary, whatever it may be, and they're wanting to have that special occasion, and they're willing to pay the extra pricing. So understanding where you are within the pricing strategies and where you want to be is an important part of profitable pricing. Charge your price is what I say to people. First of all, you're not in business to match the price that your competitors set. All too often, that's what people do. They look at what everybody else is charging, and they charge either just a little bit less, and that leads to ruin. You are in business to service your customers. That's what you're there for, to provide them with that experience that they're willing to pay for. However, to get your price, as in number 3 there, your customers have got to perceive added value. And perception is truth to the perceiver. In other words, they've got to see the added value. Sometimes they don't, by the way, and I'll give you a few wordings later on so that you can re-emphasize your added value. But again, you've got to know that added value to be able to get your price. So, how do you get that value communicated? Well, I'm going to give you 4 ideas. Now, based particularly on the restaurant I was talking about beforehand, or the cafe, but you can adapt these quite easily to accommodation, hotel, B&B, visitors attraction. First one, are you highlighting your preparation methods? Remembering we're talking about restaurant here, but you can change this around. So words like braised, seared, pan-fried, oven-roasted, wood-fired and poached give your restaurant and menu a level of prestige. The words themselves are giving that extra value. It increases your customer's perception of the value that you offer. So are you highlighting those particular methods? Next question there to think about. Are you incorporating reasons that the dish is special, different or unique? For example, dry-aged beef, or farm fresh eggs, bread baked in-house each morning. I was at one of our award-winning B&Bs near Alroas in Staffordshire the other day, filming the owner as she was making her fresh bread ready for her award-winning breakfast for her guests, and people pay accordingly. They love the fact that she's taken the time to make that, create that breakfast and the preserves and the freshly baked bread. So identify what makes your ingredients unique and highlight this. And those ingredients can be within your room, for example. They can be within the attraction. So, a couple of other questions. Are you highlighting where the ingredients come from? Staffordshire beef. This, for example, this may mean something to people. At the very least, it gives a perception that you source your ingredients from the best local locations. And this has a particular appeal to many types of visitors. Are you specific? So maybe you serve pasta, but what kind of pasta? This is your opportunity to provide more information and enhance the customer's perception of each dish. A friend of mine running a cheese company built £1 million plus cheese company. He called himself the Ace Cheese Detective. But what he would do, he'd tell to the chef, tell the story of the cheeses. This was made by Mary in a kitchen, whatever it may be, so that the chef can then tell the story back about the cheese to his customers or his or her customers, and of course then enhance the value and of course accordingly the price. I'd like to give you some thoughts about discounting, because one concern I have is that all too often people rush into discounting. So on the screen you see a particular a little template, and across the top the present margin. Let's say your present margin is 30%, and that you want to have a price reduction of 10%. So just follow that down, and you see that I've ringed the 50% in red. So what that means is to produce the same profit, if you do that 10% price reduction, to produce the same profit, your sales volume needs to increase by a whopping 50%. Let's look at that in a different way. If you increase the prices, and let's stay with the same margin of 30%, and let's say that we're going to do the same again and have a 10% price increase. Follow that down and you see I've ringed it as 25%. In other words, to produce, if you increase the prices, yes, you're going to have a few people that may not buy so much, but to produce the same profit, your sales volume can reduce. You can take up to a 25% hit. You're not likely to do on that. Let's look at that a little bit closely on a hotelic example. We want to have a 10% discount to increase 5% of sales. To get 5% more sales, we're going to give a 10% discount. And I'm making this quite simple in this hotel. And you can see in the first column there, we've got a price of £1 a room. I can't remember when it was £1 a room, but let's just do that to make that easy for us. And let's say we're selling 100 rooms there. Therefore, we're getting £100 a night in, aren't we? If we move further down there, we've got a cost of sales per room. And by the way, this is something that people usually avoid doing. But the big professional hotels, they know how much it costs them to service a room. So the cost in this particular case of this hotel is 50p, we're saying, per room. And if we've sold 100 rooms, then it's costing us £50 to service that particular room, linen and so on. That means then we're going to make a gross profit of £50. But obviously we've got other trading expenses such as business rates and marketing and so on. And let's say they're £40, therefore we're making a net profit of £10. And that's a return on sales, by the way, of 10%. Now, let's do the exercise where what we're going to do is to do a 10% discount so that we're going to increase our sales by 5%. So straight away, instead of us getting £1 for that particular room, we're given a 10% discount, so we're going to get 90p. But we've sold 105 rooms. But 105 times 90p only brings us £94.50. So we're £5.50 down already. But the cost of servicing our room remains constant. However, we've now got to service 105 rooms, which means our costs go up to £52.50. Therefore, our gross profit, as you can see, is not the £50 as before, it's now £42. But we've still got our other trading expenses at £40, and therefore our net profit now drops to £2. And our return on sales suddenly is a very poor 2.1%. So very careful, think very carefully before you rush into discounting. All too often people are doing so because they're being pushed by things like Groupon or Voucher or something like that. Well, I'm sorry, you don't benefit so much. The only person that benefits there is probably the voucher company or the customer that gets an incredible deal. So finally, let's look at the part of managing profitable pricing. And again, it's an area too many people duck out on, but what we're about is making the business become profitable beyond just a lifestyle. There are many ratios, as your accountant will tell you, that you can apply to businesses, but these are the three ones that I suggest to you are the most important within tourism and hospitality, particularly relevant to profitable pricing: gross profit, quick ratio, and average customer sale. Now, I put onto the screen there, and you can just request the slides if you require, please, by sending me an email, malcolmg@winningmoves.com. I put on the screen a little bit more writing than normally, just to explain to you about each of the three ratios. Gross profit. You calculate it by dividing the gross profit by the sales. Now, the importance of this particular ratio is it can indicate all sorts of issues. It should remain static, but if it drops, it could mean that your suppliers' costs have increased and you've not responded in kind with price increases. That's all too often these days happening, food costs in particular. Misappropriation of merchandise either by staff or suppliers, and unfortunately there is a situation where what goes out the back door is a little bit detrimental to the business. So you've got to keep an eye on this particular cost area. Unauthorized discounts, misappropriation of cash revenue, and free handouts. So this is a very sensible ratio to be looking at. The second one is what's called the quick ratio, and you calculate this by dividing current assets, those are things that converted to cash quickly, by current liabilities. Often I find that far too many people have got things lying around in cash pools there, such as old equipment, which really they could have got onto eBay or what it may be and liquidated that rather than it sitting around there. It's a measure of the ability of a small business to pay its bills as they fall due. Now, for us at our business here, cash flow is the most important metric to manage. So we have a perpetual 13-week cash flow. It's a rolling cash flow, so that when we sit down on a weekly basis, we're looking 13 weeks ahead at all times, just to make certain that we have no upcoming cash flow problems. And if we do, then we can properly manage it and mitigate the issue well in advance of the problem happening. And the third ratio is called average customer sale. Now, this is a one where sometimes I struggle to help businesses with in tourism and hospitality, because they don't keep enough records of the number of customers they have. You calculate this particular ratio by dividing the sales that you've taken by the number of customers. So you really do need to make a note of how many customers did you have. Many then, if they don't use this ratio, many people miss the opportunity for both cross-selling and, importantly, upselling. If you measure the average customer sales, you may become more aware of how to make that extra associated or upselling, for example, drinks with food. So this ratio really does help you. It's the easiest way to improve the bottom line. So, before we finish the webinar, let's look at how we can improve profitability. And a little bit of a checklist. I'm not going to say that all these ones appeal to, each one appeals to you, but if you can look at them and perhaps have a little bit in each, then you'll get a cumulative effect. So can we increase our prices, or are we being a bit timid on increasing our prices? Do we know what our added value is? Have we been understanding that added value? Have we been adding to the customer experience that means that they're quite willing to pay for our increased price? Can we change our product or service mix? And that's an interesting one, because you may be able to add something that doesn't cost you much but means a lot to the customer. Can we maybe look at reducing investment? Sometimes people spend money a little bit sillily where they don't need to go over the board there on their property, but just make it a little bit more functional, reduce the investment. Can we reduce our costs? And now that's by buying better. You really need to know the skills of negotiation and, of course, how you can source areas by buying it better. How are we going to increase our sales volume? And this means that not opting out by saying that, okay, well, we traditionally empty at this time of the year. No, you don't have to take that as read. On my Get Fully Booked, I talk about how to fill your quiet times by things such as geocaching, things such as ancestral tourism and other packaging. And finally, a little one to consider as well. Can we change our channels of distribution? Now, what this means is it's a marketing term, means how we get to reach our customer. Are we using, for example, digital marketing effectively? Can we look at new ways of reaching new customers? So those are some key points to look at the pricing, profitable pricing, and how they can blend together. And as I say, if you get a little bit out of it, a few of those there, the cumulative effect is quite dramatic. I'm delighted to be able to send to you any of the toolkits or the items that you've heard about in this webinar. If you email me, malcolmg@winningmoves.com, then they'll be on their way to you. Thanks for watching Profitable Pricing in Tourism and Hospitality.